Welcome to the world of Tom Basso, better known as Mr. Serenity. With over 4 decades of experience in the financial markets, Mr. Serenity has made a name for himself as one of the most successful traders in the industry. His unique approach to trading has earned him a reputation as a pioneer in the field. Mr. Serenity's philosophy is based on the idea that successful trading requires a disciplined approach and a focus on risk management. He believes that emotions have no place in trading and that a systematic approach is the key to success. By following his approach, traders can achieve consistent profits while minimizing their risks. All-weather trading is a strategy that seeks to generate returns regardless of the prevailing market conditions. This approach aims to provide investors with a consistent return on investment, irrespective of whether the markets are bullish or bearish. One example of an all-weather investment is a balanced portfolio consisting of stocks, bonds, and commodities. This diversified portfolio can help mitigate the risks associated with investing in a single asset class. For instance, if the stock market crashes, the investor can still earn returns from the bond and commodity portions of the portfolio. Risk management is an essential component of successful trading. It involves identifying potential risks and taking steps to mitigate them, thereby protecting one's capital. Mr. Serenity's approach to risk management is a prime example of this. Mr. Serenity believes that risk management should be an ongoing process, with traders constantly monitoring their positions and adjusting their strategies as needed. He emphasizes the importance of setting stop-loss orders to limit potential losses, and also recommends diversifying one's portfolio to spread out risk. Trading is not just about numbers and charts, it's also about psychology. Mr. Serenity understands this better than most and has developed an approach to trading that takes into account the psychological aspect of the markets. One of the key insights from Mr. Serenity's approach is that emotions can cloud judgment and lead to poor decision-making. Fear, greed, and overconfidence are all common emotions that can interfere with trading success. By recognizing these emotions and learning to control them, traders can improve their performance and avoid costly mistakes. A systematic approach to trading is one that involves following a set of rules and guidelines, rather than relying on intuition or emotions. Mr. Serenity's approach to systematic trading is based on careful analysis of market data and the use of well-defined strategies to identify and execute trades. One of the key benefits of this approach is that it helps to remove emotion from the trading process, which can often lead to poor decision-making. Another advantage of a systematic approach is that it allows traders to backtest their strategies and evaluate their performance over time. This can help to identify areas of weakness and make improvements to the trading strategy. Additionally, a systematic approach can help to reduce the impact of market volatility and minimize the risk of large losses. In conclusion, Mr. Serenity's approach to trading can teach us valuable lessons that can be applied to our own trading strategies. One of the key takeaways is the importance of all-weather trading, which involves diversifying your portfolio to protect against market volatility. Another important lesson is the significance of risk management, which Mr. Serenity believes should be the cornerstone of any trading strategy. By managing risk effectively, traders can minimize losses and maximize profits. Another crucial aspect of trading that Mr. Serenity emphasizes is psychology. Traders must learn to control their emotions and avoid making impulsive decisions based on fear or greed. Finally, a systematic approach to trading can provide numerous benefits, including increased efficiency and consistency. By developing a well-defined trading plan and sticking to it, traders can achieve long-term success in the markets. Thanks for watching. Like and subscribe, and we will catch you on the next one.